Today we discuss the Indian banking coming of age, what we are seeing rapid strides, whether they were supported by history, how long it has been that Indian banking has come to fore, and how long it took as compared to some of the developed nations for Indian banking to come to this stage where it is aspiring to become akin to global banking and do things that global banks do. Now, if we look at banking essentially is a function of taking deposits to provide loans. And as banking evolved, the basic function of deposit and loans were associated with other financial activities like supporting trade. So as a result, what came into being was making remittances or making payments to people who are beneficiaries or recipients of a particular transaction relating to trade. With that came safekeeping, and with that came advisory business. If we look at history of evolution of banking in the whole world, we know that Jews started formal banking both in European nations as well as in the United States. They are very well known as people who are very adept at lending business. With lending, one thing more is required to be in the banking business, that is accounting. Accounting involves a little bit of mathematics, bookkeeping, and calculating income and expenditure. That essentially came in China and partly in India, and this understanding is essential to understand the basic evolution of banking. Banking in its formal sense only came about 300-400 years back. In the 1500s, actually, a formal banking was started, and some of the well-known names like the JP Morgan or the Citigroup or some of these came into being during that phase. More important to know that the banks that were formed originally as savings and loan providing banks largely became what is known today as I-banks. Now, what happened in India? India, till about the end of 18th century, that is around 1750, 1760, when the British and the foreign traders started coming in, was mostly a welfare state. If you look at Ramarajya, the concept of private wealth is not there. There used to be a few traders. In fact, in the Mauryan time also, there used to be this group called Sreshti, and they used to take money and provide a return by investing in their own business. But that was not banking. That was an investment, in kind of investment banking. So when welfare state was predominant, private wealth, which is the foundation of having a formal banking, was not there. Because private wealth generation through economic activities, whether it is industrial activity, infrastructure activity, trading activity, or even providing borrowing and lending activity, all these were not known. Because state used to take care of all the economic activities, and in lieu of that, it used to take a substantive portion of the private income into state treasury. And barely sustenance was left for the citizens. Now, with the development of society in the Western world and coming in of the concept of private wealth, private saving, private investment, came the concept of banking. So in India, even during the mythological age, there were trading related banking activity, but no formal savings and loan related banking activity. Banking activity also required some amount of formal organization through an act. Now, if we look at the first phase of evolution of banking, there are many interesting books. In the first 200 years, that is between 1750 to around 1950, when there was no particular banking regulation, there were over 600 banks, and these banks were coming and going like the, overnight visitors. Many of them lasted for less than 5 years. Majority of them lasted for less than 5 years. And some of them even collapsed before anybody knew about them. The banks that survived went into becoming the big banks that we know today. Whether it is Central Bank of India, whether it is Bank of Baroda, whether it is UCO Bank or United Bank or the Punjab National Bank, there were three main streams. One, banks that were created to serve the interest of the rulers, that is the British banks. And some of those banks were also established by the Britishers, like the Presidency banks, which later on become Imperial Bank and State Bank of India, or even Allahabad Bank, or banks which were driven by profit motive as well as a challenge to the concept that only British knew banking, such as Central Bank of India or a Bank of Baroda, or for that matter a Union Bank, or some which were driven as a Swadeshi, like the Punjab National Bank or Punjab and Sindh Bank, or for financing Indian interests in business, like Tata Groups had banks and all. Now, this was the initial phase which went up to independence, and after independence, when it was decided that banks will play an important role in the development of the nation, banks were nationalized in two phases. First, it was nationalized in 1969, and then it was again nationalized. Another part was nationalized in 2 years later, in 2 or 3 years later. Now, these group formed the core, along with the State Bank of India, which was created through a special act. But in addition to basic provider of small loans and small deposits, what was required was investment banks. Now, this phase of investment banking in India came in a peculiar format called development banks. The IFCI, ICICI and IDBI were formed as government supported, with the heart of an investment bank taking equity stake by having access to government guaranteed, government supported or government assured funds from bilateral source like JAP-Exim, IMF or World Bank, etc. Now, if we look at the other side of it, as development banks started making investments And in a country like India, when projects got delayed or project went into cost overrun, many of their investment went into trouble. So many of them became reverse merged into banks, like ICICI went into ICICI Bank, IDBI went into IDBI Bank, and IFCI is still struggling. With this came the need to expand the footprint and the banking function to be taken what is called the financial inclusion. Came the cooperative banks, regional rural banks, and even the primary agriculture cooperative societies, which started doing a large amount of banking functions in the rural hinterland of the country. Commercial banks, rural banks, and cooperative banks. These used to be the tripod on which Indian banking used to stand. Of course, there were pockets of excellence in the form of private banking. Private banking became prominent in the first phase of economic liberalization, when private banking licenses were given and large number of banks, IndusInd Bank, UTI Bank, which was supported by the former UTI, then Centurion Bank, other things came. In addition, there were banks which were functioning in the private area, Karur Vaishya Bank, Lakshmi Vilas Bank, South Indian Bank, smaller banks, but in private hands with deposit-taking abilities. Lot of consolidation then started happening. Private banks were formed and run on private lines with the liberal banking domain that was supported by the Reserve Bank of India. Private banks started creating value and started gaining market share. Real investment banking in India is still a casualty. Investment banking functions are largely done by the commercial banks, which give their balance sheet. However, unlike the Western countries, where the investment banks themselves make the deals and also support it with their own funds, here the investment banks in India are merely deal facilitators. And it is supported by either the funds from insurance companies like the LIC or from commercial banking sector. A lot of churn is happening today. Technology is redefining the complete banking landscape. Products in narrow focus areas, such as student loans, such as immediate installment credit for something that you want to purchase in the consumer area, for corporate area, balance sheet loans are coming to dominate the normal banking that we had known. It is an interesting time to watch that as gradually as we wanted things to develop, suddenly everything is getting changed. Foreign banks, which came with best practices from abroad, are consolidating. As you know, recently the retail portfolio of Citibank is being bought by Axis Bank. Some of the private banks have gone into trouble, such as Yes Bank and all. Some of the non-banking finance companies, which are doing banking functions of taking deposits and giving loans, have also consolidated. So this space is evolving faster than expected, but in an interesting manner. Thank you very much.